Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to go through the week ahead analysis. We're going to highlight the news this week and some charts of interest. So, first of all, we're going to go over the news. Now, there is a lot of news compared to last week, where there wasn't much going on. We have quite a lot of high volatility news going on this week. So, interestingly enough, there is actually some CPI data out of Australia, which is looking for a bit of a rise in inflation there. I think the main news that the market is going to focus on is definitely Wednesday. Okay, we've got some really important data coming out on Wednesday. Not only do we have the Bank of Canada announcing interest rates, which is looking fairly likely that they're going to stay at 0.25%, but we've got the FOMC statement and the Federal Reserve rate as well. So this is where we're going to see the Fed either talk about the potential to hike rates in March, because their current tapering measures are suggesting that the end of their stimulus will sort of end in March. So they've stated previously that when that has ended, they will look to hike interest rates. So it's going to be really interesting to see what they say, especially in this press conference after, of where they see the market and where they see the potential shape up. Are we going to see a rise in March? At the moment, it's saying that we are going to hold rates. I don't think they'll shock the market with a hike so soon, because like I said, they said that they'll wait until the stimulus is done before looking to hike interest rates. But it's going to be what the FOMC statement says, what they say in the press conference after. Are they going to start hiking in March? And we'll expect to see, I would actually imagine, a little bit of upside to the US dollar if they do suggest that they are going to hike in March. We'll probably see a little bit more downside to the stock markets, because what we've seen previously, or what we've talked about in the past as well, is that history dictates that usually when when the Federal Reserve plan to hike interest rates after a rate of stimulus, the stock markets actually fall before it is announced. So that's what we're seeing at the moment, and it could well happen again. So Wednesday, I think, is going to be the big day for the market. Now, going on to the strength meter, we're definitely seeing more of a risk-off market. The yen has increased substantially against major currencies. We were in that reversal zone on the strength meter, and the yen has really dominated the markets last week, which could again continue going into this week. We're going to highlight quite a few yen pairs to watch this week. I'm going to stay away from the dollar due to the fact that we do have that FOMC statement and it could go anywhere, but I am expecting some strength, but you just don't know. The Kiwi is the weakest currency at the moment. We've seen some others as well. Pound has been falling from those highs like we suggested last week on the strength meter. Going on to the dollar index then, so I've marked up a couple of areas of interest. Obviously, the market is still technically bullish here in the bigger picture. We are trading between sort of 95.83 and 95.38. Unusually, at the moment, price is just kind of bouncing between these two levels currently. So I'd expect maybe a similar sort of start to the week. I would expect a sort of slow start to the week for the US dollar, and then obviously the federal funds rate will be the catalyst to see this move. And if we start trading above this 95.83, I think it's likely that we are going to head back towards these swing highs in here. I don't see too much downside into the market at the moment, just because economically the US is in a good position. They are really going to hike rates this year. It's just a matter of when they're going to do it. So yeah, I wouldn't expect too much downside from the dollar, but obviously we don't know what could happen. Price could break below 95.38 and we could see the lows again. I don't particularly see that right now. So going on to the dollar yen, I'm just highlighting with this chart really the fact that the yen is strengthening against the dollar. The dollar has strengthened last week. We saw that bullish candlestick on the dollar index. and yen has dominated against it. We've really been pushing to the downside this week or last week. So that tells me that the market is more likely to continue in that path, especially if we look at it from a trend point of view. We failed to make a real higher high or a real constructive higher high here, and then prices started to pull back. So I think that we could probably see 112.76 on dollar yen, depending on obviously what happens this week with the Fed talk. But what I really wanted to highlight here is that yen strength more than anything, because that yen strength, we want to be trading against weaker currencies. And if we go on to pound yen, where we suggested that, you know, pound was going to get a little bit weaker last week, then, you know, we've rejected 157.10. We've traded back to this sort of minor support within the range now, just through here. But it looks to me like we probably could see some further downside. If the yen's going to strengthen and the pound's going to weaken, then I would expect this market to continue to trade lower. Where would I trade this from? I would be looking at these previous structure lows. Anywhere in and around this area I think would be ideal. You know, if we were to trade back up to it, see some bearish rejections, that would be ideal enough to start looking for continuations. As long as the market continues to make lower lows and lower highs on this particular 4-hour time frame, then I think we could see some further downside to this market. And then finally, Kiwi yen. Kiwi, the weakest currency at the moment, yen the strongest. Makes sense to come to this market to have a little look for some further trend trading ideas. Strong bearish candlestick last week. Are we going to see a follow through down to the sort of 75 area through here? If we are, again, can we look for trend opportunities? And if price can make it back to 77.24, which may be unlikely due to the nature of the market, but if it does, this could be the area where we start looking for those sellers to come back in and look to push prices further down towards this key support. So keep an eye on the charts this week. Keep an eye on that dollar news. It's going to be big. I will talk about it a little bit closer to the time as well. Thanks for watching the video. If you enjoy the content, please leave it a thumbs up. I really appreciate it. Subscribe to the YouTube channel if you want to be notified when another video is out, and I will catch you in the next one.